Welcome back. We have been waiting for the decision by the MPC of the CBN. The meeting started at about 1 p.m. and we're told that as at this time, then the meeting is over and the decision will be made known. Earlier, I had two guests who I hope will be able to join me virtually. Unfortunately, they could not hold on for that long break that we had there. We had Professor Akpanipo and we had Mr. Cyprian Orako. Professor Akpanipo is Professor of Economics and Public Policy, and we had Mr. Cyprian Orako, the Chief Executive Officer of Transerve Disk Technologies, and we were talking about some of the factors which the MPC would have to consider. Top on that list, of course, is the war going on in Ukraine and the spillover effect, which has affected commodities prices, which has affected global oil prices and has trickled down to oil prices at the pump price of diesel. And Mr. Orako, a manufacturer, told us one of the major difficulties that they're having as manufacturers in Nigeria at this time is accessing, or the certainty of accessing, foreign exchange. And that painted a picture that was not very pleasant. And these are some of the issues that the MPC would have to be considering, or to have considered. We hope to get their decision in a while. I believe they're seated. If we could see what's going on back there at the CBN headquarters in Abuja, let's have an idea to see what's going on there. I know before we got into the studio that members of the MPC and the CBN were seated, and there we have the central bank governor. It's just set to roll out the decision of the MPC. Yeah, so in a couple of minutes, I believe the CBN governor will be ready to tell us what the MPC has decided. Earlier, Professor Akpanipo had said if he was there, he would recommend that rates be hiked. Rates are currently at 11.5%, but according to Professor Akpanipo, that may not really be the reality. It is high compared to other countries, but it may not be the reality on ground as we speak, because the US, everybody's hiking rate, or seems everybody's hiking rate, with inflation and inflationary pressure being a major factor to consider at this time. And it's not different in Nigeria. Remember that there was a surge, or at least a hike in February inflation rate to 15.7 from January. And then you can only imagine what will happen with all the prices that have gone up from when the war started in 24th of February up till now. It's about a month. So we can only imagine what the figures will look like for the month of March. Energy prices have gone up. The government is talking about increasing tariff. Diesel price is at its highest, more than 700 naira. In the aviation sector, the threat of shutting down because of the price of oil or jets fuel. Commodities prices, the bakers are threatening to shut down because they don't have, apart from the diesel, they don't have access to wheat anymore, which you know Russia is a major distributor or exporter of wheat. And even before now, we had the difficulty to access corn. And so if we don't have wheat and then we don't have corn, then what will the bakers and the feed millers do? Which is why they were threatening to shut down. So we would only imagine, until we see the figures by next month, we only imagine what the inflation figure would look like for the month of March, but not a good one, and a difficult thing for the MPC, because we have the CRL, which they already complained that it was too high. And then we have, of course, rates at 11.5, which already is being said to be too high. So these are some of the hard decisions that the MPC will have to take at this time. So I believe the CBN governor is set now. He would start announcing the decision of the MPC for the month of March. Let's join in.
First, that is today. In an environment of heightened geopolitical tensions and persisting macroeconomic uncertainties associated with the recent Russia-Ukraine crisis and headwinds stemming from the lingering impact of COVID-19 pandemic. The committee reviewed developments in the global and domestic environments in the first quarter of 2022 and the outlook for the rest of the year. These include the likelihood of tightening external financial conditions associated with monetary policy normalization in the advanced economies, the cocktail of sanctions imposed on Russia, the global supply chain disruptions associated with the invasion of Ukraine, and increasing vulnerabilities associated with the burgeoning global private and public debt portfolio and risks to financial stability. Others include increased uncertainties across major financial markets and the increased risk of continuing rise in prices confronting central banks due to the huge monetary and fiscal stimulus injected into the global economy to subdue its downside risks to growth. 10 members of the committee attended this meeting. The global development. The committee noted with concern the recent heightening of uncertainties confronting the recovery of the global economy as the Russia-Ukraine conflict and numerous sanctions against Russia introduced a new dimension to risk to the tepid recovery of the global economy. It further took into cognizance the lingering headwinds associated with COVID-19 pandemic and global supply chain constraints, rising inflationary pressure, and more recently, the progression of interest rates hike by the US Fed and the Bank of England. Members noted that the ongoing war and the resultant sanctions against Russia will continue to have a considerable impact on the global economy, global supply chain, as both countries are major players in the global commodities market. With both countries significantly interconnected to the global financial markets, global capital flows are expected to experience some downturn exacerbated by the increasing sanctions on Russia. Consequently, the earlier projections by the International Monetary Fund for global output growth in 2022 and 2023 of 4.4 and 3.8% respectively are likely to be revised downwards due to the overarching downside risks identified on the horizon. Price developments across major advanced economies continue to trend down upwards and is expected to be accentuated in the short to medium term, reflecting the persisting supply bottlenecks, rising food and energy prices, and the ongoing war, which heightened the observed trend. In the emerging market and developing economies, inflation remained high, with some economies recording inflation rates well above the average in the advanced economies. This was mostly due to a mix of downside risks from the COVID-19 pandemic, capital flow reversals, legacy structural challenges, supply-side bottlenecks, and exchange rate market pressures. In the global financial markets, investors maintained a substantial portion of their portfolios in gold and other precious metals as the uncertainty around market securities persists alongside the pandemic and the emergence of new risks following the imposition of sanctions on Russia. It is still unclear at the moment how the progression with monetary policy normalization by some key advanced economies will impact the recovery of the global economy, given the risks associated with this crisis. Investors are, however, adopting a cautious approach in view of the considerable impact of these developments on activities in the global markets. Global financial conditions are thus expected to tighten in the short term as the investment horizon gradually becomes clearer. This is expected to impact capital flows to emerging market economies as risk-averse portfolio investors adopt a wait-and-see approach. Consequently, the risks to the overall recovery of the global economy remain heightened and call for cautious policy maneuvering to avoid a sharp downturn such as experienced in 2020. Domestic developments. According to Nigerian Bureau of Statistics, NBS, real GDP grew by 3.98% year-on-year during the fourth quarter of 2021, compared with 4.03% during the third quarter of 2021 and 0.11% in the corresponding period of 2020. On a quarter-on-quarter basis, it grew by 9.63% during the fourth quarter of 2021, compared with 11.07% during its preceding quarter. This indicates the fifth consecutive quarter of real output expansion following the exit from recession in 2020. The positive performance was driven largely by the growth in the non-oil sector to 12.36% during the third quarter of 2021 from 10.99% during the third quarter of 2021. Quarrying, transportation and storage, education, financial and insurance services, information and communication, as well as steady rebound in manufacturing and mining activities were key to the growth of the non-oil sector. The committee, however, noted that although the Manufacturing Purchasing Managers Index remained above the 50 index points benchmark in February 2022, it moderated slightly to 50.01 index points from 51.4 index points in January 2022. This sustained positive performance in the manufacturing PMI reflects the resilience of the economy in light of persisting headwinds to the recovery. The non-manufacturing PMI, however, remained below the 50 index points in February 2022 at 49.0 index points, while a slight moderation compared with 41.01 points in January 2022 as legacy headwinds such as the persisting insecurity and infrastructural constraints continue to impact production and the ease of doing business in Nigeria. The committee observed with concern the marginal increase in headline inflation year-on-year to 15.70% in February 2022 from 15.60% in January 2022, a 0.1 percentage point uptick. This increase was largely attributed to a rise in the core component to 14.01% in February 2022 from 13.87% in January 2022, while food prices moderated marginally. The rise in core inflation was mostly due to rising energy prices as a result of the current scarcity of petroleum, premium motor spirit PMS, rise in the cost of automotive gas oil AGO, and hike in electricity tariff. Committee, however, expressed cautious optimism that with sustained interventions by the bank in various sectors of the economy and broad fiscal support to tame these legacy structural constraints, price developments will moderate as output growth improves. MPC therefore urged the fiscal authorities to seek innovative ways of addressing the current critical supply side challenges confronting the economy to enable the unhindered transmission of all the recently deployed fiscal and monetary stimulus to the real economy for good. Members noted the growth rate of broad money supply M3 increased to 2.12% in February 2022 compared with 1.74% in January 2022. This was largely attributed to an increase in the growth rate of net domestic assets, the NDA, to 5.78% in February 2022 from 2.62% during the previous month. On the developments in the money markets, committee observed the movement in money market rates around the asymmetric corridor, reflecting the prevailing liquidity conditions in the banking system. Accordingly, the monthly weighted average open buyback rate decreased to 5.81 and 9.3% in February 2022 from 6% and 16% in January 2022, respectively. The decrease in the OBB and interbank core rates reflected the liquidity conditions in the banking system. MPC noted the sustained improvement in the equities market in the review period. The all-share index and market capitalization both increased significantly from 42,716.44 and 22.3 trillion naira on December 31, 2021 to 47,282.67 and 25.48 trillion naira on March 18, 2022, respectively. This prevailing positive performance was attributed to gradually improving macroeconomic fundamentals which support improved outcomes and returns on investment from companies quoted on the Nigerian Stock Exchange Limited. MPC also noted the continued resilience of the banking system, evidenced by the further moderation of the ratio of non-performing loans (NPL) to 4.84% in February 2022 from 4.9% in December 2021. The committee also noted that liquidity ratio remained above its prudential limit at 43.5% in February 2022, while capital adequacy ratio moderated slightly to 14.4% in February 2022 from 14.5% in December 2021. Overall, members expressed confidence in the bank's regulatory regime and commitments to maintaining stability in the banking system, urging the management to sustain its tight regulatory surveillance on the system. On the external reserve position, committee noted the decrease in the level of gross external reserves to $39.44 billion as at March 2017-2022 from $40.21 billion as at January 25, 2022, indicating a decrease of 1.95% over the review period. The moderate accretion to reserves reflects the duality of Nigeria's position as an oil exporter and importer of refined petroleum products. Committee reviewed the performance of the bank's various interventions to stimulate productivity in the manufacturing, industry, agriculture, energy, infrastructure, health, micro, small and medium enterprise sectors. Between January and February 2022, the bank disbursed 29.67 billion under the Anchor Borrowers Program for the procurement of inputs and cultivation of maize, rice, and wheat, three crops that hitherto were significant concerns of FX demand. These disbursements bring the total under the program to over 4.5 million smallholder farmers cultivating 21 commodities across the country, comes to a total of 975.61 billion naira. The Nigerian Commodity Exchange (NCX) has also been restructured to effectively aggregate excess output from the bank's Anchor Borrower Program finance projects with the objective of moderating food prices. The bank also released 19.1 billion to finance 5 large-scale agricultural projects under our Commercial Agricultural Credit Scheme (CACS), bringing the total disbursement under the scheme to 735.17 billion naira for 671 projects in agro-production and agro-processing projects. In addition to this, the bank disbursed the sum of 428.3 billion under the 1 trillion naira real sector support facility to 37 additional projects in the manufacturing, agriculture, and service sectors. The funds sourced from the real sector support facility, differentiated cash reserve requirement, were utilized for both greenfield and brownfield projects under the COVID-19 intervention for the manufacturing sector. Cumulative disbursements under the real sector facility currently stands at 1.75 trillion naira, disbursed to 368 projects across the country. Whereas under the 100 for 100 policy on production and productivity, the bank has disbursed a total of 29.5 billion to 31 projects, comprising 16 in manufacturing, 13 in agriculture, and 2 in healthcare. As part of its efforts to support the resilience of the healthcare sector, the bank also disbursed 8.5 billion to 6 healthcare projects under the Healthcare Sector Intervention Facility, bringing the cumulative disbursements to this sector to 116.72 billion naira for 124 projects comprising 31 pharmaceuticals, 56 hospitals, and 37 other services. An additional tranche of 14.7 million was disbursed to 5 researchers under the Healthcare Sector Research and Development Intervention Scheme. To support households and businesses affected by COVID-19 pandemic, the bank disbursed 21.66 billion to 19,685 beneficiaries, comprising 12,044 households and 7,641 small businesses under the TCF within the period. Cumulative disbursement under the TCF currently stands at 390.45 billion to 797,351 beneficiaries, comprising 660,096 households and 137,255 small businesses. The bank disbursed 11.11 billion to power sector players under the Nigerian Bulk Electricity Trading Payments Assurance Facility, PAF, bringing the cumulative disbursement under this facility to 1.28 trillion naira. The sum of 12.64 billion was also released to DISCOs under the Nigerian Electricity Market Stabilization Facility, Phase 2, NEMS 2. Cumulative disbursement under NEMS 2 thus stands at 232.93 billion naira. Both interventions were designed to improve access to capital and ease the development of enabling infrastructure in the Nigerian electricity supply chain sector. Our outlook. The overall medium-term outlook for the global economy remains uncertain as the war between Russia and Ukraine persists alongside the ongoing COVID-19 pandemic. The sanctions against Russia are expected to have a considerable backlash against the global economy, as Russia is an interconnected economy both in the global commodity and financial markets. The extent of the backlash has, however, not fully crystallized, but presents a significant downside risk to the recovery of the global economy if the crisis is not resolved immediately. Additionally, COVID-19 pandemic remains a significant downside risk to global recovery as the virus continues to mutate into highly infectious strains. This is impacting a high level of uncertainty on economic agents, thus creating inhibitions towards making the required investments to set the recovery on a sustainable path. As part of the lifting of restrictions associated with COVID-19 pandemic, the strong recovery of aggregate demand has continued to pose a strong upside risk to inflation as supply bottlenecks persist. This has been further aggravated by sanctions imposed on trade with Russia and other blockages associated with supplies from Ukraine. Consequently, inflation is expected to remain considerably high in the short term, even as some advanced economies progress with interest rate liftoff. The rise in both corporate and public debt in the advanced economies and emerging market and developing economies is also a major threat to global financial stability, as the risk of sustainability is heightened in the currently tense global environment. Capital flows are thus expected to be restricted as global financial conditions tighten over the short to medium term. In the domestic economy, available data on key macroeconomic indicators suggest the likelihood of subdued output growth for the Nigerian economy for most of 2022. This is hinged on the dampening impact to growth of rising energy prices in the domestic economy, tightening external financial conditions as some advanced economies pursue interest rate liftoff, as well as the persistence of legacy security and infrastructural problems. It is, however, expected that monetary and fiscal stimulus will remain in place to continue to support the recovery until downside risk to growth and the upside risk to inflation dissipate substantially. Accordingly, the Nigerian economy is forecast to grow in 2022 by 3.24% CBN estimate, 4.2% federal government estimate, and 2.7% IMF estimate. The committee's consideration. The Monetary Policy Committee noted with concern the impact which the global price increase in petroleum and other products is having practically on all economies. Committee further noted that this has resulted in imported inflation on the Nigerian economy and believes that specific actions need to be taken to ensure that this trend does not continue, given the adverse consequences an aggressive rising price level could have on cost of living and purchasing power of Nigerians. Before the Russian-Ukraine war, MPC was optimistic that the moderate decline in inflation was sustainable due to the positive impact of good harvest on price levels. The MPC worries today that whereas global prices have gone up, this has been compounded by shortage of supply of petroleum products. In the short run, MPC urges NNPC to take urgent steps to ensure adequate supply of petroleum products in Nigeria so as to reduce the rate of arbitrary increase in price of these petroleum products by oil marketers. The committee noted with grave concern the unprecedented rate of oil theft recorded in recent times and its debilitating impact on government revenue and accretion to reserve. In the medium term, MPC is hopeful that the proposed takeoff of the Dangote refinery in the course of the year would help to improve the supply of petroleum products in Nigeria. MPC also note that the rising price of diesel is compounded by the problem of inadequate electricity supply in Nigeria, which has adversely impacted domestic prices. MPC advises the CBN management and the fiscal authorities to take specific and urgent action to avoid many power generating stations shut down for turnaround maintenance, resulting in the current unwarranted shutdown of our generating assets. MPC is relieved that food inflation declined marginally due to good harvest. Although some scarcity is expected as we approach the planting season, the committee is optimistic that with a high level of strategic grain reserves of the CBN, it is relieved that food prices will remain relatively moderated. MPC further advised management to redouble its development finance initiatives aimed at boosting domestic food output, which would help in moderating food inflation going forward. And by extension, headline inflation could get moderated. In its consideration as to whether to hold, tighten, or loosen, MPC remained concerned that the global situation on rising prices may continue in the near term, but may begin to moderate if deliberate and urgent actions are taken by both monetary and fiscal authorities to correct the rising inflation. On another hand, the committee was satisfied that the use of the bank's discretionary CRR policy should be deployed more aggressively to control the level of money supply in the economy. In addressing the issues whether to tighten in order to rein in the rising price level, MPC was of the view that given the fragile state of the current GDP growth and the potential external and domestic headwinds from Russia and Ukraine war, a contractionary policy stance will stifle the expected investment expansion needed to drive growth and absorb the shock in Nigeria. MPC also feels that not only will tightening reverse the steady improvement recorded in credit expansion, it is also of the view that tightening would not necessarily tame the inflation, particularly where the marginal decline is relatively not yet sustainable. In the case of whether to loosen, the committee feels that loosening will trigger further liquidity surfeit and fuel inflationary pressure as available funds outstrip the economy's absorptive capacity or domestic capacity utilization. MPC also feels that loosening will trigger FX demand pressure as the excess liquidity would exert demand pressure on the FX market and trigger a naira depreciation, which would also fuel inflation. Based on the foregoing, the committee decided to adopt a hold stance as it would indicate a precautionary and consistent policy stance with the prevailing economic conditions, particularly as further economic and financial shock are exerted from the ongoing Russian-Ukraine war. Committee's decision. While growth has continued to improve, members noted that inflation was confronted with the upward pressure due to emerging risks within a domestic and external environment. MPC, however, noted that the substantial upward push to price levels, while increasing its collaboration with the fiscal authorities to ensure that inflation is adequately reined in and growth is returned to a strong and sustainable path. The committee also encouraged the bank to continue the use of its intervention mechanisms to deploy funds to the output-stimulating and employment-generating sectors of our economy. Members were of the view that tightening the stance of policy to rein inflation could adversely impact the fragile recovery of output growth and may stifle the expected investment expansion. On the strength of the above considerations, 3 members voted to raise MPR by 25 basis points. 1 member voted to raise MPR by 50 basis points, while 6 members voted to hold all parameters constant. Those who voted to raise rates, though few, feel the need to signal further tightened stance to rein in inflation. It was decided by a majority vote to retain the MPR at 11.5%. In summary, MPC voted 1, to retain MPR at 11.5%, 2, retain the asymmetric corridor of plus 100 and minus 700 basis points around the MPR, and 3, retain CRR at 27.5%, and 4, retain the liquidity ratio at 30%. Thank you for your gracious attention.
Yeah, and that's communique number 141 of the Monetary Policy Committee meeting of the Central Bank of Nigeria held today, January 21, 2022. Thank you, Governor. March 2022. Thank you, Governor. We'll take some questions from the press. Okay, your name and your media and the question. Thank you.
Good afternoon, Mr. Governor and members of the MPC. My concern actually is still on the Russia-Ukrainian crisis. This has led to a bit of a spike in inflation across the globe. I want to know what MPC will do in specifics to help Nigeria's situation, because petrol and diesel is rising, and it has a very, very significant effect on the other parts of the economy. Thank you.
What press do you represent?
Oh, the Sun, please. The
Sun, okay. Yes.
Thank you very much, Mr. Governor and other members of the committee. My name is Sunday Michael Ogu, and I write for Daily Trust newspaper. I have 2 questions. In your address, you said the MPC recommended that the central bank the fiscal authority seek innovative ways of addressing the supply side challenges with fuel supply, which has exacerbated our inflation position. I was wondering if the committee has specific recommendations of what you think can be done to rein in what we currently experience. My second question has to do with the just concluded IMF Article 4 consultation report, which urged the central bank to scale back on its credit intervention as they are likely to cause market distortions in the long run. And listening to you today, we are hearing the MPC asked the development finance to redouble its intervention, and you said monetary and fiscal stimulus will continue to remain in place until downside risks go down. So what exactly are your response to the IMF? Thank you very much, Mr. Governor.
I won't fight IMF, don't worry. I can't even fight them, yes.
Good afternoon, Mr. Governor and other members of the MPC. I am Nancy Naji, the executive producer of Moneyline with Nancy on AIT. I have two questions. The first question is on Infraco. I remember I asked that question in November of 2021, and you gave a response. I would like to know the status of Infraco, the 15 trillion naira, and whatever the status on Infraco. The second question is the press release last week on bank neutral cash hubs. What does it mean, really? And what does the bank hope to achieve with that? Those are my two questions. Thank you.
Good afternoon, Governor. My name is Leah Katumba Batunde, and I report for the Nigerian Television Authority. I have concerns arising from the power sector and, of course, the unavailable electricity that we've been battling in the country. You made mention of some monies running into trillions that has been injected by the central bank into that sector and various interventions. What can we possibly do to improve the level of power generation and distribution in the country since you've done this much? And also we hear that the president will be visiting Dangote petrochemical plant in Lagos tomorrow and then inaugurate maize pyramids in Kaduna on Thursday. So what role is the CBN playing in all this? Thank you.
Okay, Governor, I have two questions from Lagos. One is from Collins Mweze of the Nation newspapers. Governor, sir, what is the status of the Naira for Dollar scheme of the bank? And how is the 100 for 100 policy on production and productivity coming up? And I think the final one is from Babajide Komolafe from the Vanguard newspapers. In your briefing at the last MPC meeting in January 2022, you expressed optimism that with the bank sustaining its intervention programs through the year, food inflation is expected to trend downwards in 2022. With insecurity still a challenge, is this CBN optimistic that the prices of food will trend downwards in 2022? Thank you, Governor.
Well, thank you very much. The first question borders on the impact which the Russian-Ukraine crisis is having on the global economy. And you're asking how will the MPC or CBN be helping Nigeria respond to this crisis. In my response, when I was reading the communique, I reiterated some factors responsible for the prices, of course, aside from the Russia-Ukrainian, or the Russia-Ukraine war has resulted in a situation where crude price has increased due to supply shortage. And of course, for Nigeria, like you know, aside from this issue of crude price rising, Nigeria has not been able to meet its export quota, primarily because of unwarranted oil theft that we see today in our environment. And this obviously has resulted in the increase in the price of diesel and petrol all over the world. Just yesterday, in fact, for the first time, on CNN, I watched where they said tanker drivers are also refusing to drive, or because there's no fuel, diesel, or because diesel prices have also gone up and all that. Or cases where, because of the Russia and Ukrainian crisis, what we have seen is that because between Russia and Ukraine, for instance, on wheat, and even some elements in maize, They supply close to almost about 35% of the global volume available for these grains. And because of the war, there has been supply shortages that has also resulted in the rising price of not just petroleum products, but also on food prices or the prices of these grains. The increase is so astronomical that it is currently creating a lot of problems globally and ultimately the global inflationary pressures that we see today. But what are we doing? Like we said again in the communique, we are concerned that, MPC was concerned that the inflation that we're seeing from the core side came primarily because of supply shortage. Because if you check primarily everywhere, whether in Abuja, in Lagos, or most of the centers, there still remains fuel queue everywhere. So what you find is that because there's this fuel queue arising largely from supply shortages, there is arbitrary increase in prices by retail marketers because they are not sure whether they will get more diesel after they've sold their stock. In fact, they are pricing what they are holding based on their expectation of their replacement price. So I don't know, somebody was saying yesterday when I was at a session that even the price of diesel had risen to almost about 700 or even 800 naira per liter. So what are we therefore saying? We will try as much as possible, and we were told at this meeting today by the representative of finance, the PAMSEC Finance, that the Minister of Finance and then NPC are holding engagements to see to what can be done to make sure that adequate funding is provided so that petroleum products is made available, so that they can be imported and then all our filling stations can have these products. We are also saying we'll be engaging in NPC as well. If there's any kind of intervention that we can provide to help it, make it easy for them to bring in these products, so
That's
that
right.
we can, so that this
The CBN governor is
shortage
answering questions after relaying the decision of the MPC for the month of March. And the issue he's talking about there was one of those that we spoke earlier before we went on for the briefing, the issue of the surge in global oil prices and the attendant effect on Nigeria, diesel, the price of diesel and what it's doing to manufacturers, to the real sector. And he noted that the PMI, the manufacturing PMI actually tapered, from January to February. We have our guest, just a couple of minutes before we let go of this conversation. We have our guest now joining virtually now. We have Professor Akpanipo joining us virtually, I believe, and Mr. Cyprian Orapo. You saw them earlier in the studio, but now they are joining us virtually. Do we have our guest, Mr. Orapo? We have Professor Akpanipo.
Yes, Ini, I'm here.
All
Thanks
right.
for bringing me back again.
Thank you for joining us virtually. So, Mr. Rapo, you had the decision. It's a hold again. Were you expecting this? Are you expectant? What do you see from here with this whole decision by the MPC?
I don't know. Is this question for me or for Professor?
For you, Mr. Rapo.
Okay, for me.
Yes, they decided that the rate still remains for interest rates, CRR, the reserve. It still remains. So, are you expectant? Do you expect anything to be different?
Honestly, we have seen this before. Okay, we have seen rate changes, and Nigerian, the reality we have on ground seem not to be responding to lots of these changes. Okay, I really think that there are so many other local variables that government can attend to bring out the needed changes outside the changes in the MPR, the changes in the CRR that remains, or the rate of the CRR, they're still at 27.5%. The liquidity ratio remains 30%. Where we need changes are in that are not where government has control. For example, the power, the avoidable problems we have in the power generation. Okay, as long as we don't have electricity to power our factories, the diesel cost increasing. The diesel market is liberated now that people can import based on what happens in international markets. I don't know the area where government can affect changes there.
But Mr. Rakpo, the CBN governor says that they're working with NNPC to ensure that there's fund for more import, because this is more of a supply disruption. So supply is not meeting up with demand, you know. So are you hopeful when you hear him say that the CBN will work with the NNPC to ensure more fund for more imports?
Yeah. I mean, of course, it's better than nothing if CBN provides funding for the importers to import more diesel. Okay, but what if the problem is not unavailability of diesel, is the high cost of diesel? Because overseas, the cost of diesel has also gone up overseas. Okay, so what if the problem is not funding? Okay, so how then do you moderate the prices? Okay, so I think there are some areas where government can handle more easily, and the areas where government is helpless. This funding now, let's even take it for granted that funding is the problem, and government provides money for the importation of more diesel. How long is it going to take? It's going to take weeks and months before it normalizes. So what happens before the imported diesel comes in?
Let's just bring in Professor Ekpo now. Prof, there were some people on the committee who believed in what you believe, that it's time to hike rates. Unfortunately, there were just 3 of them, so we did not get the rates being hiked. So did you see this coming? Did you think you will have more people voting for a hike of the rate?
Yes, I was expecting that there will be a hike in the rates, no matter how marginal, because of the global environment and domestic problems. So I'm disappointed, because you can anticipate inflationary pressures coming. You can anticipate that. So I was hoping that more people will vote for a hike in rates, so that we can fight the inflationary pressure that is coming. So I'm disappointed, but in the MPC, majority always wins. Let's see how it goes. Although, as I said earlier, the MPR is important in terms of interbank funds in Nigeria, but we have not seen the impact on the lending rates. But the inflation is very crucial, because that's the CBN's major mandate.
Yeah.
Inflationary pressure, because of hardship on the poor in particular. Even now, it's a lot of pressure on the business sector. But anyway, let's see how it goes. In terms of the CBN working with the MPC to ensure the flow of PMS through imports. Well, that's fine, but I think we should be looking. That's not fine enough, because why can't we get the refineries working? We have 4 or 5 refineries in the country. I think the CBN should assist them to get those refineries working.
I guess the CBN, Prof, the CBN mentioned Dangote. I think that's where we're looking at least for now.
The Dangote refinery may come on stream, but Dangote will not give us. It's not for that Christmas. He's a businessman. I don't know when it will come. In the long run, we're all dead. So what can we do now? And what can we do now to reduce the hardship on Nigerian people? That's what is important. Waiting for Dangote refinery is not the answer, because it will come, but he's a businessman. He won't give us free. I'm not saying that what CBN is saying is totally wrong, but I'm just saying that in the immediate, to reduce the hardship, I think such should be done. Let us hear when the refineries will get working. The CBN could intervene in that sector, which they've been doing in that sectors, so that the four refineries will work, at least work up to 30% capacity, produce enough PMS for local consumption, and then we can save enough forex, which can be used for other critical sectors, vital sectors like manufacturing. But they do the research, maybe they have a different results. But I was thinking that definitely they will hike the MPR, no matter how marginal, in order to begin to anticipate the pressure on inflation.
So, Prof, now that we still have a whole decision, what is your outlook for? Before the next MPC, what do you see?
Well, I think the outlook, what I think they are saying exactly is that the government side, the fiscal side, should do its work. We should implement the fiscal and the structural policies. The investment policy should be executed aggressively in order to ensure growth. So they're still trying to make sure that the economy grows. But the economic, we all want the economy to grow, but growth is only a necessary condition for development. Growth is not development. So we have to grow at least double digits. So I think what they are saying is that they should let the government sector do its work. Perhaps begin to implement the approved National Development Plan and the capital aspects of the budget. That could be what the CBN is trying to say. Get the fiscal side working. Let them walk the talk. Let them implement all those policies that will boost the private sector and then boost production. That could be the direct way of leaving the rates, the MPR on change. Secondly, I don't know what they will do, but the CBN should do something about the lending cost. The cost of funds is too high. If you wait for the market to determine the cost of funds to bring it down, it's very impossible. The CBN intervention fund is given to banks at a single digit, meaning that it could be done. And it's not the Apex Bank that can intervene in that sector, because the Nigerian banking sector is oligopolistic. So if you wait for the market to determine a better rate in terms of the lending cost, it will be a tall order.
All right, Prof. Thank you so much. I think let's just get final words from Mr. Orapo. Mr. Orapo, where do you see relief coming from now?
Well, honestly, there are some quick wins that I may want to profile. Quick wins in the area of foreign exchange. Okay, because all these things still borders on apart from the fiscal policies, the monetary policies which CBN is in control of. CBN may not have much to do apart from kind of working together with the Minister of Finance and so on. But in the area where CBN has its hands on, the foreign exchange market, they would have to take some deliberate policies, okay, to create some confidence in the market, to let there be some certainty. Okay, the cash market, the FX cash, not non-cash market, the FX non-cash market, where foreign exchange dollars are available in one bank and not available in another bank, or the money from I&E market, how it used to be before. Okay, because the I&E market was used to moderate the black market rate about 4 or 5 years ago when I&E started. Is there something that the CBN was doing right that time that CBN is no longer doing right now? Okay, can CBN go and tweak that policy such that the sellers of this foreign exchange will be able to sell at a reliable market, and then the buyers will be able to access these funds?
All right.
This really where the CBN can go.
All right. Thank you so much, Mr. Cyprian Orapo, the Chief Executive Officer of Transserve Disk Technology. Thank you for your patience. We went a whole long haul there. Thank you for sharing your thoughts with us. And of course, Professor of Economics and Public Policy, University of Uyo, and Chairman, Foundation for Economic Research and Training, Professor Akpanipo. Thank you so much for being so patient with us, joining us all through the conversation in spite of the break. And that's it for this special, very special, I would say, episode of the MPC decision for the month of March. I'll remember this for a while. We're going to have a normal Business Incorporated tomorrow at 1:30. Do join us then. But of course, before that, we'll have Business Morning at 10 a.m. I'm Ini John Mekwa. Enjoy the rest of your day.